Well, the latest World Economic Outlook by IMF has gone ahead and revised the global growth outlook upwards and also India growth outlook upwards. In fact, India is likely to be the fastest growing economy within the emerging markets, developing nations, as well as if we compare it with the advanced economies. Not just that, if we look at IMF projections, IMF states that they see global growth at 5.5% in 2021 and 4.2% in 2022. In fact, the overall global growth reflects the expectations of a vaccine-powered strengthening of the overall economic activity and also additional policy support coming in from few large economies. IMF states that, however, despite the vaccine approvals which have raised hopes of a turnaround during the pandemic year, renewed waves and new variants of the virus do pose concern to the overall outlook. Having said that, IMF does note that the overall global growth contraction for 2020 is seen at minus 3.5%. IMF also states that the pandemic is expected to reverse the progress that was made in poverty reduction over the past 2 decades, and according to IMF, close to 90 million people are likely to fall below the extreme poverty threshold during 2020-21. IMF also states that the strength of the recovery is likely to vary significantly across countries depending upon the medical interventions, effectiveness of policy support, exposure to cross-currency spillovers, and structural characteristics entering the crisis. Within the emerging markets and developing economies, IMF states that China growth is likely to be fairly strong. However, India would be the fastest growing according to their projections. IMF has projected India GDP growth at 11.5%. This has been revised upwards by 2.7 percentage points from the earlier projection, and they see India growing at 6.8% for 2022. This would be the fastest growth for India within the entire emerging markets and developing economies. China growth is projected at 8.1% in 2021 and 5.6% for 2022. IMF notes that effective containment measures, forceful public investment response, and central bank liquidity support have facilitated strong recovery in China. However, the emerging market and developing economies group, within this group, oil exporters and tourism-based economies face particularly difficult prospects considering the expected slow normalization of cross-border travel and subdued outlook for oil prices. IMF also calls for a good amount of policy support to be continued across various economies depending on where they are. In fact, in terms of the advanced economies, IMF states that advanced economies enjoy low borrowing cost, and hence they should use this opportunity to provide fiscal support as needed so as to ensure there is a lasting recovery. Along with that, monetary policy should also remain accommodative until the recovery takes firm roots. According to IMF, emerging market economies should maintain fiscal and monetary support where debt sustainability is not at risk and where inflation expectations are well anchored. And for low-income developing countries, IMF states that they have far less policy space and have entered the crisis with high debt, which is likely to even rise further on account of the pandemic, and hence IMF states that support from the international community through grants, concessional loans, and debt relief would be essential for low-income developing countries in order to ensure that these countries are not overwhelmed by the crisis cost and rising poverty. Thus, according to the IMF, policy actions should ensure effective support until the recovery takes roots. In fact, policy actions should also lay emphasis overall in order to raise potential output, ensure that the growth is inclusive for all, and also ensure acceleration of transition to lower carbon dependence.